Welcome to How Controllers Can Support Growth, a Playbook panel discussion brought to you by the Controllers Council. My name is Neil Brown, Executive Director of the Controllers Council. And before I introduce our expert panelists and our partner sponsor, let me share some brief housekeeping items. This webinar is CPE eligible with 4 polling questions, so please answer each poll. And if not CPE, please answer to benchmark your peers. Also, we'll have a quick survey at the end of the presentation, so please complete the survey. Real easy survey. And then next, we'll have Q&A at the end of the presentation as well, so use your GoToWebinar control panel to ask our experts questions. And finally, you'll receive a link to this webcast via email in the next 24 hours. Now a word about our sponsor and partner, Bill, a leading financial operations platform for small and mid-sized businesses. Bill automates the future of finance so businesses can thrive. Bill's integrated platform helps businesses to more efficiently control payables, receivables, spend and expense management. Hundreds of thousands of businesses rely on Bill's proprietary member network of millions to pay or get paid faster. Headquartered in San Jose, California, Bill is a trusted partner of leading U.S. financial institutions, accounting firms, and accounting software providers. For more information, visit bill.com. And with that, I am very pleased to introduce our expert panelists, truly a dream team, Christine Gu and Kimberly Hollinger. Christine is SVP Finance and Chief Accounting Officer for San Francisco-based Clarify Health Solutions. She's an active CPA with more than 20 years of F&A experience. Prior roles include VP of Finance, CAO, Corporate Controller, and a public accounting career at KPMG. Christine's experience includes both private and public, from startups to public ready, and she has managed multiple IPOs and SPACs. Christine earned a BS accounting from San Francisco State University, and she was the Controllers Council 2022 National Controller of the Year. Kimberly Hollinger is Controller at WAG Group, an on-demand dog walking platform with 400,000 plus participants in over 5,000 cities. I know that we personally use dog walking. Your competitor, I guess, but I'll look. Prior roles included Assistant Controller at WAG Group, Senior Director of Finance and Controller at ADESA, a dealer-to-dealer automotive services company. Kimberly holds an active CPA license in the state of Arizona, and she earned a Master of Business Administration from West Texas A&M University, along with a Bachelor of Science in Accounting from California State Polytechnic University. Kimberly was the Controllers Council 2024 Controller of the Year. So welcome to our Controllers of the Year, Kimberly and Christine.
Thank you.
You bet. So let's start with that typical question of just telling us a little bit about your company and your finance and accounting org. Christine, do you want to start?
Yes. Hi, everyone. And thank you for having me, first of all. It's a real pleasure to be here. First, I want to thank the Controllers Council for hosting this event. And then a big shout out to Bill for sponsoring today's discussion. It's exciting to be part of the conversation that highlights the controller's role in driving company growth. And my name is Christine Gu, SVP of Finance and Chief Accounting Officer at Clarify. We are a healthcare analytic and technology company that leverage data to drive better healthcare outcome. Our finance and accounting team plays a very strategic role in supporting the company's growth by ensuring financial efficiency, compliance, operational excellence. So we focus on leveraging technology to optimize financial workflow and enabling our team to provide real-time insights. as well as strategic guidance to support our company growth. So that's about my company and our department.
Excellent. Kimberly?
Yes, so WAG is striving to be the go-to platform for the modern U.S. household, which includes offering solutions for service, product, and wellness. We're headquartered in San Francisco, and you may have heard of our app, WAG Walking, for on-demand dog walking and other services. We provide an online marketplace to connect pet parents with pet caregivers, so think Uber for pet services. I feel pretty lucky to have the same team that I have had since I joined WAG about 2.5 years ago, which does create a lot of synergies for us and allows us to focus on adding value to the business. Our finance and accounting department consists of 7 team members in addition to our CFO. So myself, 2 managers, a senior, 2 staff, and an assistant. We have a high-performing team. We're tasked with all the facets of F&A for the company, so order to cash, AP, general ledger, sales and use tax, SEC reporting. We pretty much do it all. So everything that's required to run a compliant and efficient department to support the business in the strategic decision-making. So that's a little bit about me and our team and the company.
Neat. All right. Well, thank you for that. And with that, we are going to get to our first poll question. So let me launch that. How does your company grow? Select all that apply. So we have a number of options here: organic growth, inorganic growth options, not growing. Note that all answers are anonymous and strictly confidential, so please take a few seconds to reply here. A few more seconds. This will be the first of 4 polls. Okay, well, let's wrap that up, and we'll just quickly share results here. Organically, 72% by a wide margin, the leader. Inorganic via M&A, 34 via financing, capital PE, IPO. We should mention SPACs since Christine is an expert at that. Not growing, 9, and not sure, 9. So that not sure, we don't know about that, but so we'll come back to that, and that will lead us into our first panel question. And that is, how has or is your company growing? First of all, is it growing organically or inorganically? So Kimberly, why don't you start us out here?
Sure. Yes, so it is a combination. So WAG definitely grows organically through new products and services. That's definitely something that we're focused on, expanding that suite of services. But additionally, in 2022, WAG did go public through a SPAC, which is actually when I was brought on, and then also has done growth through strategic M&A. So combination of all.
Oh, neat. Christine, how about yourself?
Yeah, first of all, I apologize. My webcam is not working. I'm not sure if you guys can see me, but anyways, so for us, in terms of company growing, so Clarify is growing both organically and strategically. So on the organic side, we expand into adjacent verticals and introduce new solutions that cater to evolving needs of like health plans and providers. So our growth is driven by deepening the product portfolio and then expanding customer use cases, and then also making some critical commercial hires. So that's the organic side. And then in parallel, we also evaluate inorganic opportunities such as like partnership or tuck-in acquisitions that can enhance our data or technology stack. So as a finance leader, I play a key role in assessing those opportunities and making sure, right, it balances our growth potential with the integration risk. So to basically ensure alignment with our long-term strategy. So that's how we kind of grow so far.
Neat. Right, well, let's get to our second panel question now. And that is, how does finance and accounting support corporate growth? Select all that apply. So again, please take a few seconds. Give that just a few more seconds. And it looks like voting slowed down, so I will share results. So number one, the support of corporate growth is nearly 70%, systems, processes, automations, etc. Followed by 41% for hiring, staff recruitment, retention, training, and then that's followed by 33% centralize or decentralized staff. Okay, that's maybe not the best answer there. I'll work on that. Via consultants or outsourcing certain functions, 16%, 10% not sure. So again, these do tend to flow into our next panel question, which is, how does finance and accounting support growth? So Christine, why don't you go first, and if you could first share with us whether you're centralized or decentralized in your F&A department.
Yeah, so for us, we support the growth by being embedded into the business. So, you know, F&A isn't just like a back office function for us. We view ourselves as an enabler of growth, so not a cost center. We're centralized, but very collaborative. Our team supports the growth basically through, I would summarize in 3 key pillars. Number one is operational excellence. So we implement cloud-based systems like NetSuite or closed management system like Forecast, and also automation platform like Bill, right, which streamlined ARAP and reducing manual work and increase accuracy, etc. And then the second pillar that, you know, we are driving for is the scalable infrastructure. So we anticipate growth early and invest in scalable process. For example, like the month-end close automation or real-time dashboards, and get ourselves, you know, audit ready to the extent that we can. And so we're not always playing catch up. The third pillar, I would say, is strategic partnership. So especially our FP&A function engage very closely with commercial and the product leaders. We are also serving the sales op function in that regard, and we build very flexible models to evaluate pricing, go-to-market efforts, and then as well as product profitability. So we, in addition to all that, right, we also partner with outside consultants, and then also have an offshore team to handle, you know, day-to-day transactional work, which allows our core team to focus on high-value activities such as strategic planning, forecasting, technical accounting, board reporting, controls, and also business partnership to support the overall growth.
Awesome. Great summary. Kimberly, yourself. Kimberly, you want to check your audio?
Yes, thank you. So we support growth. We are a centralized team. Due to the nature of our company being in the technological space, we don't have physical locations. So everything is able to be centralized more easily. So I think it is somewhat dependent on what the business looks like. When I worked at ADESA, we had 56 US auctions. So those were physical locations. So we had a more decentralized model, and then also some functions were centralized. So I think the business and what the support what support the business needs is going to ultimately drive how the F&A team needs to be shaped to really support that strategic growth of the business. So we support with budgeting, forecasting, other strategic growth projects, but ultimately one of the big projects that we've taken on was implementing a lot of automation and controls. So really building that control environment. We implemented Flowcast as a closed software, an inventory management system, and a few other items to really take the preparers to more of a reviewer level and really leave the time open for some of those strategic projects to move the business forward. So I think that, you know, it really depends, as I said, what support the business needs. So I think it's going to be a different answer depending on what business you work for and what gaps the finance and accounting team can fill.
Neat, and that was neat that you compared your prior role with quite a bit different structure. Yeah, cool. All right.